this is where the good stuff is, guys. This is where you're going to really get a big kick out of these trade alerts. And remember, it's not via Twitter. This is hands-on in a trading room. You'll be in this room, and you're going to understand. You're going to know exactly where it takes profits. If you don't know or if you're confused, you speak up. Hey, I don't understand it. So you're not going to be by yourself with a Twitter feed. This is live, okay? And again, we manage our phones and our email accounts every time that somebody has a question or concern, okay? Paul, take it away. Give it that stuff for the slides here.
All right. All right, let's start off with this slide here. Now, this is an example of what you would see in the alert room. Basically, we have 6 charts up on the monitor, and you will see them in the Adobe room. It's not this exact link that you're using to get into this webinar. It's another link, but we'll get it to you if you're interested in the trial. But basically, right here we talk about set your trade management criteria so your risk entries and exits match your trading style. So what we do first is we will decide if there's a trending day versus a range-bound day. On trending days, we will set up the proprietary software to have multiple levels of take profit. So if you can see here, originally what you would see when the system is alerting you to get into a trade, in this example, this is the DX, this would be for a long trade, you would see this one flag right here, and you will see the entry for 98.59. So you would go to your platform and put in an order to go long the DX at 98.59. Once this price is hit, and now that you're in the trade, you will look back to the chart to determine what your stop loss would be. So you can go and put a stop loss in at 98.46.5. And then you have to decide on how you want to trade this alert. Do you want to scalp it, or do you want to take advantage of maybe a greater move? So basically we have 3 different levels to take profit. The first one we call the scalper. So in this case, you would take the profit at 98.65. We have what they call the profit maximizer. This is the second level, and you would take the profit at 98.74. Okay? And then the third one is what we call the runner. So you can see that we loaded up on the DX with 3 contracts. You can see that number 3 right there. We have a stop loss to get us out of all 3 contracts if price action traded down to 98.46.5. We're going to peel off one of these contracts at 98.65. That's our scalper level. Now, the reason why we have the scalper level is for 2 reasons. One, if we are stuck in a range, you want to be able to take profits quickly and move on to the next trade. You have to build your day through many trades. So if we're range bound, we will let people know in the room, set your orders to take profits at the scalping level. The next one, if we're trending now, you want to take advantage of these greater moves. So you would take one of the contracts off at the scalper level. You just locked in profits. You paid for your commissions. Now it's a free trade. Because what you'll notice is that this stop loss, once we hit this level of 98.65, the stop loss is going to shift to your entry price. So it will move up to break even. So now what you need to do is go into your platform, change your stop order, move it up to 98.59. You already took profit on one contract. It's a free trade. Even if you get stopped out on the other 2, it paid for all your commissions. Okay? But if it's a trending day, you want to take advantage of price action moving. So as price action moves up, you'll take another contract off. So now you locked profit at the scalping level, and you locked profit at the profit maximizing level. Now on the third contract, what will happen at this point in time is if we have an explosive move to the upside in this example, we're going to take advantage of that. The stop loss will start to trail the price action, so you'll see it move every time a candle closes and price action is moving up. You'll see that stop loss move up with the price. So now you can go in and adjust your stop losses accordingly. And then when we get stopped out, we get stopped out. We maximized our profit without any risk. So that is what we've created in our proprietary software, and you guys can take advantage of it now by taking the signals that this software is providing. So we talked about the three different layers. We got the scalping level, profit maximizing level, and the trailing level. So we built flexibility into the system. Some people say, hey, you know what, that's great, that profit maximizer level and that trailing thing, but I'm a scalper by heart. I don't want to do any of that. That's fine. You can set your system up and take the alerts and take the profit at this first level all the time. If you're a type of person where you don't like to scalp all the time and take advantage of the greater moves, you can. You can uh, take the first level and then take the profit of the last two contracts for this example at the second level and forget the runner. So there's a lot of flexibility for your style of trading. We don't want to make miniature Marks and Pauls. We want you to trade your own personality because that's very, very important to make sure you stay on the right side of the edge. You want to keep your discipline and keep your sanity while you're trading. So by us telling you to trade like us, and if your personality isn't like us, then you're already at a disadvantage. Okay, so this system will allow you to trade the way you want. We will tell you what we're doing and how we're setting up the alerts, but again, you have the total flexibility on what you want to do. Okay, the next slide. So now this is the example of a range bound day. So we're adjusting our risk. So now instead of trying to squeeze out some extra profits by hitting the profit maximizer level or having a trailer, we're going to take everything off at this first level. So this is the YM. Here's our stop loss. Here's our target level. All three contracts are being sold at 18039. Okay? So this, again, we need to adjust our risk, and on days that are range bound, this is the signals that you will see in the room. All right, let's keep going. This is, again, a hash of what we just discussed. So this is the entry point here. This is what you'll initially see. And I'm going to show you a video. The next slide is a video, so you'll actually see it in real life, and I'll pause it and we'll talk about it as it's happening. But this is exactly what you'll see on your screen. You'll see the entry level. So when you see this flag pop up on your screen, you got to go in and put the order into your platform. Once price action hits that level, now you're in the trade. That's when the stop loss and the scalping target and the profit maximizer target, if it's trending, will show up on the screen. Okay? So this is exactly what it will look like. All right, here's the video. I'm going to play it, and then I'm going to... All right, here we go. So you can see now that we have this level popped up for the DX at 98.60.05. You can see, let me stop it real quick. You can see what happened here. We ended up, the proprietary system ended up determining that a better entry would be now at 98.58.5. So you saw that adjust. So what you can do is go into your platform and change your entry level now. Now we're in the trade, and you can see we have our stop loss here. This is the level to put your stop loss. And here's target number 1. This is our scalping level. And here's target number 2 for the profit maximizer level. And we have 3 contracts right here. It shows the number 3. So we're in this trade with 3 contracts. We're going to be pulling one off at level 1 and pulling one off at level 2. We just took profit at the scalper level. And all this will be displayed on a monitor that looks like this. We just took profit on the second level. Now watch, you saw the stop loss get moved up to break even. So you need to go into your platform and manually change it now. And as the stop loss chases price, you need to go in and also adjust it. So these 6 charts are what you'll see in the room, and we do change them. Sometimes we'll have the 6C in there, which is the Canadian dollar. We may have the 6E, the euro dollar. So we do change the charts every once in a while for what's trading at a higher probability. Again, you can see that the stop loss trailed the price. For the traders that use our automated trading proprietary software, it happens. It does it for them automatically. But if you're going to be doing the alerts, you will have to go in and manually change these stops as it trails the price.
Also, just real quick, I'd like to add, when you're doing a trade alerts, you will miss trades because we can load up the proprietary trading system, the people that do subscribe, to all 6. So again, depending on your resources, but you still could do, you could still put one contract on all 6 if you had to. So you would definitely miss a couple of trades, obviously, because you're only so fast as a human. Here it's fully automated, fully functional. Everything is done for you. You do not have to do anything other than a couple of settings that we would tell you based on our optimizing the system. Okay, go ahead, Paul. I just want to make a quick point.
So here's the next one, the YM. Go short the YM at 17,770. And another thing you have to pay attention is because if the entry loses its optimal level, it would cancel just like it did. So you saw the flag disappear. Now down here we had another signal to go long the ES. So the entry was the first thing that you would see, and then once price action hit that level, sometimes it happens very quickly. So that's what Mark was talking about. You may miss some of the alerts because you have to manually type it in. But here's the level for the first target. Here's the level for the second target. Here's the stop loss level. So this is the scalper level. This is the profit maximizing level. And then we will trail price action with the third contract.
Yeah. Now think about this, right? You're in this trade. This would probably be nerve-wracking for you guys, right? I mean, as well as me. Like, oh my God, it's clinging here. Where's this going? Boom. We just took the first target. Now, obviously, things we do get stopped out. But if you look at it, I mean, this eliminates all of the confusion, the pent up, anxiety of, oh my God, am I going to get stopped out? And then you know what happens? You get stopped. You take your own stop just to actually realize that this trade is actually working out pretty fantastic. And this is what you want. You want effortless trading. You want to be like the machine, and that's where when we teach people to understand, saying, okay, I want to be able to see an entry, identify my stop loss, my profit target, and then move on to the next trade. This is what the trading system and the trade alerts does for you. Okay, you can see we just took out our first profit. If you look down here on this lower wick candle that prior to the engulfing green, many traders would have been just taking their stops saying, oh, I just want to get out here. And look what happened. This ended up being a huge trade, on 3 lots. Look, this is fantastic. I just wanted to make a point to the new traders that this is where the effortless trading comes into play. Okay?
All right, so this is exactly what you'll see on the in the room, the alert room. So again, it's not a Twitter feed. You're not going to be getting a Twitter that's now delayed. You're going to be seeing it as it's happening from our monitors. Again, with the alerts from that day, you can see we took 2 alerts. One got canceled, and we took the other 2. So we had a $700 profit in one contract, but we totaled $1285 in profits for that day off the 2 trades from the alerts. So if you were in that room that day, you would have made 2 trades. One would have, and this is what you would have walked away with. So what we did, let me step back a little bit and talk to you about how this proprietary software was created and what it kind of does. So again, Mark talked about 28 years of experience. So he took that experience. He worked with a quantitative analyst quantitative analysts help them to put together a proprietary index that will decide to go long or go short the market. On the 10-minute chart, you can see that we trade off the 10-minute chart. Now, why the 10-minute chart? Well, we're not scalping the market like scalpers will on a 3-minute or a 5-minute. We want to take advantage of the longer swings within the day. So the sweet spot that this quantitative analyst came up with crunching data over many, many years was the 10-minute chart. So we built the automated system around this 10-minute chart. And under the hood, with the proprietary index that was created, it determines if we're going to go long or short. Once the system determines that we're going long or short, now it has to look for an optimal entry to get in. So when you see that entry level on the screen, it may disappear because it lost its edge. If it lost its edge, it will disappear and you need to go and cancel that order immediately. If it gets adjusted to a better price, you need to go in and adjust it to that better price, because again, the system, we try to optimize the system to be 60% or greater profitability per trade. We want the percentages on our side. So by taking the trades off of these alerts, you now just put the edge in your favor, or probability on your side. So it's just now a matter of trading. But one of the biggest mistakes, let me actually get to the next slide, which starts to talk about the mistakes, is consistency. People will pop in randomly. They may not take every trade. They'll cherry pick a trade. So now what they're doing is they're changing that edge, that probability. It may not no longer be in their favor. They may trade a half a day or skip a half a day, just because maybe they lost money the previous day. Because again, this system is not 100%. No system ever will be. But if you can stack the percentages in your favor and you're consistent with your trading, and you put your stop losses on and you take your profits where we're recommending to take your profits, locking in profits as price moves up, then you're on the winning side. You're on the winning edge. Most traders don't take the time to develop a trading plan. Well, you know what? Or rules, systematic rules. We just did that for you. So the proprietary software will always trade the same period. We just took all the human emotion out of it. Because one of the things that I like to tell traders, especially when I start talking about psychology of trading, is that fear factor. You have a part of your brain called the hippocampus that remembers bad memories or adverse feelings towards an event. So if you just got stopped out 3 times in a row and you're down $1,000, well, guess what? You may hesitate on that next trade, and that next trade could be the one to get that 1,000 back and now be in the green, and that has happened. So we were down $1,200 one day, and we ended up at the end of the day being up $1,200. So not only did we trade to get that $1,000, that first $1,200 back, we actually exceeded that and ended up with a green profit of $1,200. So the only way you can do that, though, is by being consistent in the market and having a trading plan or systematic rules that work. And we believe that the alerts that you'll be receiving do work. It leaves you vulnerable to spur-of-the-moment decisions without an edge. Again, if you don't have a plan, you don't know really what you're doing. You're kind of guessing. You're kind of throwing darts at the market. Sometimes you'll be lucky and sometimes you won't. But you'll never have that edge. And when you don't have a plan, when you're not consistent, you lose your discipline. Period. It's no other way I can explain it. So that's some of the biggest problems that new traders face, and some experienced traders. We had people call us and say, I've been trading for a couple years, but still I'm kind of spinning my wheels. I'm not to that point where I can quit my other job. Well, why? We start talking, it's because they don't have a plan in place. They don't have systematic rules. They're never consistent. What typically happens is a person will pick up a book, they'll read about a holy grail indicator, they'll throw that indicator on the chart. It doesn't matter what indicator you're using, we're susceptible to market conditions. So that indicator now may not be producing quality, profitable trades because it's out of favor. So what does that person do? Instead of being consistent, they'll move on and find another holy grail. And then they'll move on and find another holy grail. So it's the reason why they do that again is because they don't have a plan. They don't know what type of trader they are. Are they a scalper? Do they want to take advantage of intraday swings? Or do they really want to take advantage of these big explosive moves when the days are trending? So
You know, I just want to elaborate one more thing on it. Sorry, I didn't mean to interrupt, Paul.
Mhm.
But a really good point here is commitment to strategy, okay, i.e. trading plan, if that's the case. Many traders do not make a full commitment to their trading plan. And I mean their strategy, call it what you will. But it's so important. If you're trading a system or you're trading your own system, give it some time. Give it 6 months, give it 3 months, because all in all, you cannot judge a system by really a 2-week trial, 3-week trial, right? Or if, let's say, you put your own system together and you thought it was working, now it doesn't work, and now you change and you alter the trading system, it's not going to get you anywhere. Make a commitment to what you want to do, whether it be this trading alerts, trading system, or anybody else's, but you really need to make a full commitment before you can judge if the system is viable for you. Remember, every system is susceptible to market conditions. If the market conditions are lousy, the system isn't going to produce much, okay? But it will keep you out of trouble. Okay, that's the big and most important thing that I want to discuss with you. But go ahead, Paul.
Yep.
Talk to them about the performance here.
Yep. So here's the performance record since October of 2014. Now, we've been using the automated trading system for many, many years, but we programmed it and released it to the public starting October 14th. So the first month we released it, you can see here's the monthly P&L. We're up over 19,000 for the month. November, 3,800. December, 6,700. January, 7,500. February was our only down month. March, over 5,700. Last month, over 4,700. So you can see that the system works. Here's the track record. We do have statements to confirm all this if you guys wanted to take a look at those. So this is, again, the signals that are produced by the automated trading system, okay, which is called the Beast. Not the best, I'm sorry. There's a typo there. It's the Beast. So all those signals that you saw in the previous slide were produced by our proprietary software called the Beast. And what I'm excited about is this next slide. Okay. Last time I looked through my phone a few minutes ago, we had over 80 people sign up for this event. They're actually waiting for the recording, and we know that. But we have a 14-day trial offer that we want to extend to the first 50 people. For normally our alerts is $125 a month to receive the alerts. These are typically what we will trade. The ES, NQ, YM, TF, these are the major indexes. We got the DX, which is the dollar. The Euro is a 6E, the Australian 6A, the DAX is the German index, crude, the British pound, and the New Zealand dollar. We project the alerts during the US session and also overnight. So if you're in Asia or Europe, you can log into the room and you'll see the 6 charts, and you can trade primarily the currencies. It will be the DAX and the currencies in the middle of the night, and then during the day you'll see the major indexes, the ES, NQ, YM, and TF, and a combination of all these. So what we're going to do for 14 days is extend the trial to you for $12.50. I mean, that's like 3 lattes at Starbucks. So for a small commitment on your end, $12.50, we'll let you into the alert room, and you can see the alerts in action. If it's something that you're interested in, write down this address right here, write it down, and then go to it. And then that will get you over to that 14-day trial. Okay, so it's for the first 50 people. Now we're going to open it up to questions, and go ahead. This is your time now. Have a great night, everybody. And again, hopefully you'll contact us with any questions. Don't be shy. So it's support@tradingmarkettechnicals.com. Have a great night. Thanks.